Okay, the S&P 500 daily cloud chart shows the lagging span here at 4370.36. That was the close for today on the 17th. So tomorrow it has to get above 4394.42 to escape the baseline and get back above it instead of being under it. And price in the aftermarket hours for the S&P 500 at 6:27 p.m. Central Time on the 17th is 43.67. And it looks like after the market closed today, it went down to 43.61.40, 10 points away from trend factor down 2. And that's the start of the buying zone, if you dare. And back in the cloud, tomorrow's price on the 18th must get above 4425.41 to escape the cloud and get back above the leading span 1, the top of the cloud here. So if the lagging line can get it back above the baseline, and then turn your focus over here to see if price can get above the cloud. And the channel 3 low is at that level, so 43.76. Still prices below that in the aftermarket hours, and it looks like price nailed the Stark band, lower band, at 43.62.36. It's hard to do, and the Bollinger Band is above everything at 43.88.97. So that's going to be resistance to 43.88.97. And to get back above the cloud is 43.89.23. So that could be a tall order for price to get back above the baseline 26 bars back concerning the lagging line right here. And the 50 exponential moving average in gold is at 4427.90 to start the day on the 18th. So that's right around where price needs to break out above the cloud for the current day's price. And that's going to be a tall order too. So the pressure is on for the S&P 500, or at least to cap the upside. So this downdraft really needs to be held above this 100% qualified and confirmed propulsion exhaustion down level 4220.49. This cannot get hit. It's okay if it comes close and gets the Fibonacci retracement for D wave, up wave 4, but if it hits that, even inadvertently, there's probably going to be more downside. It would be nice to cap the downdraft around that level above there. Maybe this disqualified down 3 will act as really good support, 4228.31. If it doesn't and heads down past this level, it could quite possibly make it down to this low over here, 48.28. So price ticks lower than that low, and this D wave up 2 will shift over and negate the 3 and 4. So then D wave up 3 will start all over again, and that wouldn't be the end of the world, but we really want to try to avoid that and keep the D wave up 5 going on here, because that's the wave that D wave is on now, because the 4 printed, so we're on the 5. And the 5 will print on a tick higher than this high. And again, the validation for D wave up 4 is at 42.43.12. You can see it highlighted in pinkish mauve color here, along with all the other levels for support and maybe buying zones. So here's the trend factor down 3 over here, 42.28.31. So price needs to get stopped there and not hit this qualified and confirmed daily 100% propulsion exhaustion down at 42.20.49. That would be a bad scene. And price does not need to nail the 61.8 Fibonacci retracement level. You can see it 42.43 something. All it really has to do is get below the 50%, 42.99.90, so basically 4,300. If it could dip its toes below 4,300, maybe nail the trend factor down 2, and that would suffice. So that's why I'm calling this a buy zone here, to buy at the trend factor down 2. So anywhere in that zone, 4,300 down to 42.43 is a good buying zone, but then we are taking the risk that the 100% propulsion exhaustion down gets nailed and continues, and that, like I said, would be a very bad scene. The disqualified sell TDST is there, 4151.28 for major support. But if that becomes qualified and confirmed, then there's no limit really to the downside, and more than likely we'll get the shift over and negate the D wave up 3 and 4 and start over again, and possibly more. So here's the disqualified sell TDST at 41.51, and for right now there's really nothing around there. Well, the weekly 65 EMA 4170.94 for now, and the ongoing demand line is slowly drifting up each day, 50 cents at a time. So that might be there in a week or two. So I say it's worth the risk. Start at trend factor down 2 and see what happens here, and then take it down maybe to trend factor down 3, and then if it hits that and decides to keep going, well, that's a different story. Then we took a big risk and we're going to be sitting in a sea of red. I mean, that pitchfork one is so well positioned. The whole pitchfork itself is anchored at the very top. The all-time intraday high goes right across there, and you could see the patterns chart for that. But that's so well positioned, and to get underneath pitchfork 1, 42.49.77 for today, and it's going to be drifting down every day, so depending how long it takes to get there after the bounce, it almost has to bounce because it's so oversold. I mean, the New York traditional McClellan breath oscillator to get back to zero would require 4,923 advancers over decliners to get back to zero. So that's rivaling the first quarter of 2022 when the volatility was just unbelievable, and there definitely was some big trouble going on then, and it's really nowhere near that right now. So the FOMOs ran this up, And now the fools are running it down. So that's those with the fear of ongoing losses soon.